How are real interest rates doing compared to in the past with the recent rise in yields?
Well, I think that's really kind of the point. I mean, if you look at where we are right now at almost 3% on a 10-year Treasury, it still amounts to a real yield of only about 1.1%. Historically, over the last 20 years or 25 years, that number's been about 2%. And if you go to the 50 years before the financial crisis, about 2.6%. So we're still just inching along the road back to normality on real rates. Now, I don't think we'll get the whole way there. I think, another 50 basis points, maybe a 350 on the 10-year Treasury sounds like much more of an equilibrium level. But I still think rates need to rise somewhat because real rates are too low, and they're too low for a healthy economy with very low unemployment, inflation beginning to rise. There's no reason for rates to be this low.
No, although we have come out of negative territory to a large extent. I mean, around the world, we used to have 12 point something trillion dollars in fixed income in negative yielding territory. And now that's only, and I put that in quotation marks, 7 point something. OK, let's move back to equities then. So where in equities, you said domestic and international, but specifically where domestically?
Well, I think you still play the sort of the cyclical play. I mean, it's not so much value versus growth. It's about cyclical versus defensives. So you're still overweight financials. They're still looking relatively cheap, and they still benefit from the further increase in rates that we expect. I think technology also looks very good. There's very strong global growth. I think the dollar will come down some more, and that will increase those international technology profits. So I think that's looking good also. And again, I get away from things that people are buying just for the dividend yield because those things like REITs, telecom stocks, which are not that expensive though, and utilities, but REITs and utilities, they are somewhat expensive, but also people are buying them for their yield. If yields on treasuries go up, that should hurt those stocks.